Hello guys, and welcome to my YouTube channel once again. In today's video I want to show you share with you some little secrets about the engulfing candlestick pattern. The engulfing candlestick pattern is one of the entry triggers, and a lot of traders make use of it. So if you have been experiencing some losses even when you try to use the engulfing candlestick pattern, so there are chances that you are not aware of these secrets, these little things I'm going to share with you. They are little but very powerful. Then the earlier you realize them or are able to, identify these things I'm going to show you on the chart, then the better. All right. So if you're watching my videos for the first time, please click on the subscribe button and join, help us grow, and like this video because I am very sure you're going to get some massive value from it. Share your thoughts in the comment section, guys. All right, so let's dive into the video. All right, so one of the things you need to understand about the engulfing candlestick pattern is that the location, or would I say location or position, wherever you find it on the chart really matters. You can't just find it anywhere and you expect it to work. When you start learning price action and candlestick patterns, the engulfing candlestick pattern is one of those candlestick patterns that we know for reversal, reversal and continuation. So once you see them, most times they do not work. There are times you will see them on the chart, but they do not work. Like, you still have to do a lot of stuff. Yes, you see them and you try to enter a trade, yet it doesn't go your way. You start thinking maybe the engulfing candlestick pattern doesn't work. It really works. It works. It's just where you find it. It's just where you find it on the chart. So to make sure that the engulfing candlestick pattern really works is for you to ensure you find it on a support and a resistance zone. Make sure you have a support and resistance zone before you think of finding the engulfing candlestick pattern. In other words, to be sure that you find a good engulfing candlestick pattern to use, once you open your chart and you want to do analysis, guys, first of all, mark out your resistance and support. Mark out your key levels from a kind of a top-down analysis, marking out all those zones. Maybe personally, I trade on the, I go from the daily time frame, 4 hourly time frame, 1 hourly time frame, then maybe 15 minutes time frame. I can still mark on the 15 minutes time frame, though it's actually my entry time frame. Though most times I go to the 5 minutes too, especially if I am trading volatility pairs. Like here, you can see I'm on V50 volatility 50 index on the daily time frame. So once you're able to mark out all these zones, it helps you to identify the kind of candlestick pattern, engulfing candlestick pattern you should expect. For example, now you can see that we have our support here, this drain I've just made. You can see we have a bearish engulfing candlestick pattern at this point, and you can see the market did not sell because this is a support zone. So you don't need to look for a bearish engulfing candlestick pattern on this zone. If you find a bearish engulfing candlestick pattern on this zone, and you want to enter a sell trade, you definitely be in losses. You'll be in losses. Then you can see here we have a bullish engulfing candlestick pattern, but the market did not go up immediately. These are the things I will also discuss later. I will discuss why the market did not go up immediately after this engulfing candlestick pattern was formed. Because you can see after the candlestick was formed, the market was still trying to sell and consolidating. If you go to a much lower time frame, you see it was a very strong consolidation before it later bought to the upside for some days before selling to the downside. We're on a daily time frame, guys. So once you see these patterns on the wrong zone, it gives a false signal and you enter the trade and lose some money. You might even end up blowing up your account. So we have to always look for bullish engulfing candlestick patterns on support zones and look for bearish engulfing candlestick patterns on resistance zones. For example, now let's look for this, a bearish engulfing candlestick pattern. This support turned resistance. You see, immediately after this bearish candlestick was formed, this engulfing candlestick, the market sold. Even if it came back to do a kind of a retest, it still sold to the downside. And also, mind you, this is the daily time frame. if you can find this on the daily time frame, if you find this on the daily time frame, immediately this particular candlestick was formed, then it is a guarantee. It gives you an idea that the market of the next day will possibly be selling. So you can make a whole lot of money within this day here, regardless of what will happen after this day. Just this day alone, you can make some good amount of money, guys. You can make some good amount of money, guys. You know, and the same thing is applicable to the bullish engulfing candlestick pattern. If you find the bullish engulfing candlestick pattern, you see that on a very nice support zone. If you mark out your support correctly, there's a very high chance that the next day the market is going to sell. The market is going to buy nicely. Now, the same thing I'm going to explain that happened in the previous bullish engulfing candlestick has also happened here. That is why after this bullish engulfing candlestick pattern, the market sold. The market sold. It has been happening a lot of time. Let me show you other instances and I'll explain why that happens. There's one I even saw yesterday while I was in with my students on the one-on-one mentorship. Now we have this bearish engulfing candlestick pattern on a strong support resistance zone. You see it sold down massively. It sold down massively. All right, so let me now explain what happens. I want to explain why this candlestick, this bullish engulfing candlestick, did not work. You see, immediately after the bullish engulfing candlestick, the market sold. It happens a lot of times. Now, why this would not work is because the market is actually, this bullish candlestick is actually resting on a resistance zone. If you look closely, you see that there was a resistance zone right there. There is a resistance zone right there. Let me just get this. There is a resistance zone around this point here. You can see. So there is nowhere, meaning that the market is just forming this candlestick and resting the candlestick on a resistance zone, and it is a bad signal. So if you see this without taking note of the fact that the market, the bullish candlestick is actually resting on, it closed on a resistance zone, you might end up entering a buy trade, and at the end you go in losses, guys. You understand? So you have to always check where it is formed. This, most times this may happen such that the market, the candlestick did not just rest directly on, close on a resistance zone, but a little above it. Like you might have something like this, and then you have the bullish candlestick close here, then the market moved a little. On getting to this zone, you see start selling massively. Might just drop a wick here and then sell nicely to the downside. It moves in the opposite direction. So these are the things you have to look out for whenever you open the chart. Draw your trend lines, mark out your resistance support zones, and try to identify the engulfing candlestick pattern. Once the engulfing candlestick pattern is formed, check if there is another candlestick, another zone just close to it, like a resistance or a support zone. For example, if I go to the 4-hourly time frame, I'll show you a setup I saw yesterday, which was supposed to be a nice sell. Here, look at this. You see this? Let me see if I can zoom in, make it better. You need to understand this thing I'm showing you guys. Okay, you can see we have a bearish engulfing candlestick pattern. Usually when this happens, we would want to expect that the market would want to come and do a retest since it broke out of this zone. We want to expect the market to come down, to come and do a retest after this bearish engulfing candlestick pattern. But unfortunately, the market has been rejecting this zone. You see, market has been rejecting this zone previously. Let me see if I can zoom in again. Oh, that's the final zoom. You see, market has been rejecting this zone previously. So on forming this bearish engulfing candlestick pattern, you see this time around, it even tried to sell. I remember telling my students that what I'm saying is the market is not going to actually continue going down immediately. It might end up leaving a week. So the best thing I would do is to wait for the next 4-hourly candlestick to close. You understand? You wait for the next 4-hourly candlestick, or based on the time frame that you are. If you find this on a 15 minutes time frame, you find this maybe this engulfing candlestick pattern on the 15 minutes time frame, and you find that it is actually on a support zone which you know the market would most likely not easily break through this zone to continue selling. All you need to do is to wait for the close of the next 15 minutes candlestick. If it closes bearish, then there is a chance that the market will continue selling to the downside. But in most cases, what the market will do is to just drop a wick, then buy to the upside, and it continues buying to the upside. So this is a false signal. This is a false entry. If you enter with this thinking the market is going to sell, then you will lose some good money. You lose some money. The same thing is applicable here. You see there was a bearish engulfing candlestick pattern at this point, and you see what the market did. It didn't sell. Instead, it bought. So these are the things you need to take note of. If you do not take note of this, the market is always going to play with you. The market is always going to taking your money, you know. So you have to always take note of this, guys. Most times you need to go down to a lower time frame, check what happens. I think I saw one engulfing candlestick pattern here that the market didn't go immediately. Yeah, there's one that the market didn't go immediately while I was explaining to my students. One moment, guys, let me just quickly, I think it's somewhere around here. I think it's somewhere around here. I have to pause the video and get it so we won't waste time. Unfortunately, I can't find the actual one I was looking for so that I can explain. But let's look at this one. Let me explain this one here. I can use the one to do part of the explanation. All right, so you can see what happened here. We have a bearish engulfing candlestick pattern here, and you can see that this is coming from the support turn resistance which we drew on the daily time frame. So seeing this bearish engulfing candlestick pattern on a higher time frame zone, like you are finding it on a higher time frame resistance zone. Take note of that what I'm saying. Higher time frame resistance zone, it's very important. So on this 4-hourly time frame, this 4-hourly time frame is where we have the candlestick, the bearish engulfing candlestick pattern, and we are finding it on the daily time frame key level. This is actually a key level now. Then there is every guarantee that the market will most likely sell. Yes, the market will most likely sell. But what happened here? You see that after the market, after the close of the bearish candlestick, it tried to sell, and it was going up. It did all this for over a day, try to consolidate around here before it sold a little, still came back again, then before it continued selling. Because most likely what you would expect is the market, after forming this bearish engulfing candlestick pattern, the market is supposed to continue selling to the downside easily like it usually does. But most of the time you need to go down to the lower time frames to check what is actually happening in the market. Now from the higher time frame, I can see that there is a kind of a support somewhere. There's a kind of a support level around this zone that is actually acting, causing the market not to go down immediately. So I might have to go down to a lower time. I might have to, let me pull out this right there. Let me change this color to black. Okay, one moment, guys. Let me put it properly. Okay, so this is actually a zone. Then if we go down to the 4-hourly time frame, 15 minutes time frame, we will see what actually happened there. Let me mark out this area. Mark out so that we can easily trace it when we go to a lower time frame. Let me mark out this area. Then I would need to change the color so I can easily identify it. I'll change the color and also fill it. I can change it to something light like this. I'll remove it once. Okay. All right. Okay, here's the spot. All right, so let me take out this drawing. Good. So now you can see what happened. So this is where the 4-hourly candlestick, after closing, the next candlestick got to this point and dropped a wick. Now it is actually reacting to this zone here. That's why I used to tell you, once you are able to identify an engulfing candlestick pattern, now look for the nearest resistance or support zone. Look for the nearest resistance or support zone. If it is too close to the current price, you might want to wait to see what market's going to do around there. You might want to wait to see the reaction of market. If it's actually going to reverse or the market is going to maybe consolidate, later break out of that zone. That's what you need to do. You must not enter immediately if the nearest resistance, or if the next resistance or support zone is too close to the current price on the close of the engulfing candlestick pattern. This will save you a whole lot of money. This is going to save you a whole lot of money. Now, for this one, you see the next 4-hourly candlestick came, dropped a week, then bought to the upside. Since then, this is the consolidation it was actually forming, and if you can look at this pattern closely, you see what is actually happening. Meanwhile, first of all, you can see the pattern the market created here on the 15 minutes time frame. This is a kind of a head and shoulders pattern. I can take this to be my left shoulder, I can take this to be the head, and this I can take this to be the right shoulder. And now, if you come down here, you can see the kind of pattern the market is creating here. Remember, I told you, if you are seeing the bearish engulfing candlestick pattern on a higher time frame, and also on a higher time frame key level or resistance zone or support zone, then the market will definitely sell nicely. The market will definitely sell nicely. You see, after selling down to this point on the second 4-hourly candlestick, other candlesticks that were consolidating, see what they formed here. And this is also this is giving you an idea that the market will still continue to sell. Then what would you do? If you understand my continuation trading strategy, you can see that there is a pattern right here, guys. That's why you need to learn these things. You can see we have a pattern right here. Then if you duplicate this, if you want, you can just duplicate and just put another one right here. You can put it there, or you can put it here. All you're interested is you're waiting for the breakout down here. You're waiting for a breakout, and you can see on the market breaking out, it came back, the little retest here, and sold and targeted this zone. And if you can also remember, I did a video to tell you that this where we have this support here, which is the base of this of a pattern, a chart pattern, is always a very strong support zone. So if the market sells from, breaks out of a pattern and sells, you should always expect a reaction around here. And if the market successfully breaks below it, like goes below it without like impulsively, breaks through it impulsively, you should expect a kind of a retest, expect some kind of retest for the market to continue selling. So you see the market did not even break out impulsively. It actually consolidated a little here, then finally broke through it successfully to the downside. So guys, this is a very simple thing you need to take note of. Take note of where the engulfing candlestick pattern is formed. If you find a bearish engulfing candlestick pattern on a support zone, it is a wrong signal. Avoid it. If you might even use it to enter a buy trade, because what the market will do around that zone, if you find that on a higher time frame, all you need to do is to run to a lower time frame, find the kind of pattern that the market is forming on that lower time frame. If it is giving you a kind of let's say you see a bullish engulfing candlestick pattern forming on a resistance zone, on a resistance zone, like let's say we have a bullish engulfing candlestick pattern forming around this resistance zone. Now the next thing we would do is not to enter a buy trade immediately. We would want to wait to see what's going to happen. And if we are finding this on a higher time frame, like the 4-hourly time frame, we have to run to the 15 minutes time frame, see what the market is doing, the kind of structure the market is forming on that 15 minutes time frame. If it is forming a kind of an ascending wedge or ascending channel, then we know the market will most likely reverse. It's going to sell, meaning the bullish engulfing candlestick pattern we saw there is invalid. So then we have to look for a sell entry and sell the market down. That is what we have to do. Then if the same thing is applicable to the bearish engulfing candlestick pattern. If you find it on a support on a higher time frame, then you have to rush down to a lower time frame, look out for the structure the market is forming, get a nice entry, and you make some profit and run away from the market. That's what you're supposed to do, guys. That's what you do. And also always take note of these patterns I've taught you. Watch my videos if you've not been watching, or if you've been watching, try to practice them, because these things like what is happening here, if you had no idea, then you wouldn't have known where to join or to continue the trade. You see, like what happened here, we have this pattern here, the market broke out and still continued. Guys, this is another bullish engulfing candlestick pattern right here. Let me see if I can zoom it, because these things are practical and you can see them. This is a very bullish engulfing candlestick pattern happening directly on a resistance zone. This has become a resistance zone because market has been rejecting here. What did it do? It didn't sell. It didn't buy. It rather sold. This one here, we have a bearish engulfing candlestick pattern happening on a support zone. Because this is a consolidation, what happened? You see, it did not sell. Instead, it bought. So you can always find some little entries, some little trade opportunities. Though this on the 15 minutes time frame, you can go to the 1 minute time frame to find an opportunity, and you enter a trade and make some money. You scalp and run away from the market, guys. So this same thing is applicable to the higher time frames. If you find them on a higher time frame, you look for an entry. Just look for a structure and gain an entry, then you go in to make your money. Then you finally, when the market decided to break through this zone, when the market decided to break through this zone, what happened? You can see it came down here, and this has become now this strong support zone. See the bullish engulfing candlestick pattern. It bought, then got to this zone again. Now, guys, look at this. Remember that this is a zone here. I like the fact that this thing is practical, so that you can just see and understand for yourself. The market formed another support here, another that turned resistance. You can see this is a bullish engulfing candlestick pattern. The market couldn't buy above it. Instead, it gave a bearish engulfing candlestick pattern. Since the market is actually bearish, you see it sold massively. It continued selling massively to the downside. So if we can always identify this, if you can always identify these things, you will be very profitable, guys. You try to avoid some losses and you will enjoy. I'm telling you guys, this thing works all the time. It works all the time. Yes, it works all the time. So I believe you've got some value from this video, guys. Click on the like button so that this video can be made available to every other person who are looking for information like this. And also, there is a link in the description of this video. If you are yet to join my Telegram channel, the link in the description is going to take you to that Telegram channel. And if you wish to enroll in my one-on-one mentorship, because these are some kind of vital information I share with my students during my one-on-one mentorship. So you click, when you get to the Telegram channel, you'll find my direct contact, so that I'll dissect trading. I will just dissect the chart for you, because I will change the way you see chart. The way you see the chart is going to change after you've undergone my mentorship. Understand, guys? So that is how it works. Click on that link in the description, go to my Telegram channel, you find my direct contact from the channel, then you chat me up so that we negotiate your training, and then you start so that you can make money. Guys, this is already July is already ending, and I don't know how much you've made so far. Guys, do not waste time. There's no time to waste. All right, guys, so till my next video, see you and stay blessed. Peace out.